Do you want to know which loan to get so you can be mortgage free as quick as possible, as well as building the equity in your home as fast as you can? Well, that's what we're going to talk about today. Let's go. I'm Becky. I used to live in the consumer rat race just like you. But one day I had enough, so I sold it all, moved to the country, and built my own log cabin with my own two hands. Now I spend my time discovering new ways to live a simple, healthy lifestyle with more free time and way less stress, then sharing what I've learned with you. Welcome to Becky's Homestead. There are several different kinds of loans. Well, really there's many, but today we're going to talk about three. Basically the three most popular loans, and probably the three that you're going to be either offered or that you should know about if you have to get a loan for your house or your homestead. And the first one we're going to start with is a fixed rate loan. That is a very popular loan. Most loans are fixed rate, and that is the best loan that you could get. The reason being is the interest rate is the part of the loan that's fixed. If you can get the interest rate low as possible. So I'm thinking, I'm not sure what it is right now, but if you can get it like 3 or 4%, that would be a dynamite loan. And what's nice about a fixed rate loan is your payments will never change. They will be the same amount month after month after month for, the 15 years that you get your mortgage. That's very nice. You can live on a budget. You can, have the knowledge of how much your mortgage is going to be, so you can live on a budget and be frugal and plan everything out. In my opinion, cheapest is the best. I'm very frugal by nature, and being mortgage free is our goal. So we want to head in that direction, and that's going to be our focus. So part of that is getting, if you have to finance, which a lot of people might have to. I mean, I did it first. That's how I started off. So it's not like the worst thing in the world, as long as you're heading in the right direction, and that direction would be to be mortgage free. So that'll come, it'll come. It takes time, it takes a little work, a little finagling, but it's definitely possible. And knowing everything about the different types of mortgages that are offered to you when you go in, it really will put you in a better position to, negotiate a good loan so you can reach your goal of being mortgage free. The second loan we're going to talk about is an ARM mortgage. Now you're going to be like, ARM, what does that mean? Because that's how I was at first, because everybody abbreviates everything with letters, and you're just like, what does that mean? So an ARM is a adjustable rate mortgage. And they just abbreviate it and call it an ARM. So you're like, whatever. But now you know what that means. It's an adjustable rate mortgage. They're the scariest. I don't like an adjustable rate mortgage. I have never gone for one in my life, and I don't think I ever would be in a situation where that would look appealing to me. The reason being is, on the anniversary of the loan, every year, so let's just say you get a 15-year mortgage. On the anniversary of the loan, every year, the rate changes. And we all know it goes up, it's not going to go down. So your payment is going to be different from year to year to year. You might start out, we're just going to give an example. The first year, your payment might be $400 a month. 3 years down the road, you could be paying $900 a month on the same loan. And this is the key. The interest payment is what goes up. It's like your principal payment on the loan stays the same. So the part that goes up is just the interest. So you're not paying the loan off any faster or anything just because the price goes up. So that is a very risky loan. And, they'll try to trick you into that with a lower interest rate. So let's just say 4% is a good interest rate. They'll try to convince you to get the ARM mortgage. They'll say it's a 1% interest rate. It's a much better rate. Don't be fooled by that. It might be a good interest rate the first year, but that thing could jump up to 10% in the anniversary of the loan. So try to stay away from those. In fact, I would say definitely stay away from those. So in my opinion, stay away, 100% stay away from an adjustable rate mortgage. Okay, so the third one we're going to talk about is another one that's very risky, and I have actually personally seen people lose everything with this kind of a mortgage. And what this one's called is a balloon mortgage. How a balloon mortgage works is, let's just say, and they're always a short-term mortgage. A balloon mortgage is usually a 5-year mortgage or like an 8-year mortgage. It's like extra short, so that might at first seem appealing, like, oh, I'm going to go for the short one because I want to be mortgage-free faster. But here's the catch. We'll just give an example. It's an 8-year mortgage. The first 8 years, you're only paying the interest on the loan. You're basically paying maybe a little bit on the principal, but mostly you're paying only the interest rate. That's why the payment is so cheap. And you're just like, oh, I could swing that. It's so cheap. And you do feel like you can swing it. But the problem is the remainder of the loan, which is basically the entire loan, because all you've been paying is the interest, is due on the 8th year. And if you don't have that money, or you haven't come up with that money to make that balloon payment, you are in big trouble. And then a lot of times they'll try to comfort you when they're trying to get you to sign a balloon mortgage, saying, well, if you don't have the money in the end of the 8 years, we can just refinance this loan and you'll be fine. It never works out like that. They'll refinance you all right. And you will not want to take that deal because it will be such an awful deal and to their advantage all the way. Because at that point, you're in a very desperate position and they know it. And they take advantage of that. So stay away from a balloon mortgage. That's just not a good idea. I want to talk a little bit about a shorter mortgage term. Always make sure you get a fixed rate, but also try to go as short as possible. Try to get a 15-year mortgage or even a 10-year mortgage. It might be a little bit of a struggle to make the payment, but what's better to spend your money on than your wonderful home and heading towards the goal of being mortgage-free and trying to get there as quick as possible. That's a fabulous goal for anybody to have. So I highly recommend that. And one good thing about having a shorter term mortgage that you could think about when you're making that decision is you build equity in your home faster because you're paying it off faster. And I want to tell you what equity means. What equity means is the dollar difference between how much your land can be sold for and how much you owe on it. And I'm going to give you a little example. Let's just say your land can be sold for $100 and you've been making your payments and you've paid off enough to where you only owe $80 on your mortgage. So then that is $20 worth of equity that's in your pocket. That's money you've made because your house has gone up in value because, you know, that's just what happens with land and property. It goes up in value. Now, of course, in the big crash, it went down, but, you know, if you're in a good position and you've chosen a good loan, you've chosen a small place, and, you know, you've fixed it up, you'll have good equity in it, and you won't be in a mess if anything ever happens like that. To sum it all up today, what you want to do is you want to get a fixed rate mortgage. You want to have your mortgage, the length of your mortgage, as short as possible. You want to have it 15 years or 10 years. And you just want to make your payments, get on a budget, and stick with it, and stick to your goal of being mortgage-free as soon as possible.
Sign up for Becky's Homestead newsletter. Go to beckysHomestead.com and sign up on the right. You'll get articles, news, and specials from Becky every month. Unsubscribe anytime, no spam. If you like this video, click the like button. It really does help us a lot. And if you want to be notified every time we post a new video, click the subscribe button.
If you would like to help support Becky's Homestead so we can make more videos for you, when you do your shopping, if you go through our link on Amazon, you don't pay 1 penny extra, but Amazon gives us a small percentage of every purchase. And that helps us to produce more nice homesteading videos for all of you out there. The link is at the top of my website.